Good morning, good afternoon. We got this dope music going, which is pretty fantastic. We've given people about 5 minutes. We'll probably give people another minute or two here. Thanks so much for joining the Twitter Spaces. We're going to be talking some pretty fun, cutting edge stuff as it relates to NFTs and new cutting edge DeFi sort of applications for NFTs, financial primitives as it were, and specifically the title unpacking NFT indexes and yield strategies, and the strategies associated with those types of things. We're here with NFT Price Floor, and we're here with Fungify and a couple of the team members from Fungify. If you haven't heard about Fungify, um, they you definitely should go do some research on them. They are building one of the cooler tech primitives as it relates to NFTs in the space, in my opinion. Um, I also happen to be a fairly large backer of Fungify. My fund, Citizen X, was one of the larger investors in their seed round, and we're really excited to see them continue to build. And I guess we're approaching a launch here pretty shortly. Who do we have from Fungify speaking with us today?
Hey, me, Mob, I'm speaking, and as well as Hanzo on the official Fungify account.
Okay, awesome.
Hey,
Well, hey, Mob, hey, Hamzo, how are y'all doing today?
pretty good. How about yourself, Michael?
I'm doing well. I can't complain. I'm getting over a cold, so my apologies if my voice sounds a little throatier than it normally does. But doing very very well and can't complain.
Hopefully you weren't the one fat fingering Jevis's NFT
Uh,
last night.
yeah, no, definitely was not me. I wish I was the one that could have accepted the bid, but no, I did not. I tend to not mess around with those sort of like global collection offers, partially as a result of those types of things. It never meant like the R&R was seemed like just way off in terms of collection offers, which is a cool feature. But I feel like the only time I ever hear about collection offers being like working out with people, or the only time I ever hear about them in any way is when somebody got like scammed like that because they either fat
Yep.
finger something or they bid on the wrong collection or for whatever it is. But I'm doing well. How are y'all doing?
Yeah, doing great. Actually, we recently opened up registration for people to sign up for the testnet. We've already gotten a few hundred people registered. We'll announce the first batch of users that'll get access hopefully in the next couple of days. We're just staging everything on testnet right now so that they have something to work with.
Okay, fantastic. I'll go ahead and pin the testnet tweet for people can register. Um, do people have to go into the Discord in order to register?
Yeah, so it's a pretty simple process. You just submit your ETH address, and then we just verify you through Discord.
Okay. Yeah, that's pretty easy. Fantastic. Well, that's great news. And yeah, that's fantastic. How do you guys want to structure things? Where do you guys want to start, and how do you guys sort of want to move through this? We can start any number of ways, and I mean, it might be helpful to give people some background on Fungify, what you guys are building, generally, how long you've been building, um, and sort of what the macro view of Fungify is. And then we can get into some of the more technical details and specifics because I know that this protocol is going to be fairly technically. I don't know if I want to say complex, but it is probably technically complex. Uh, and so it might be helpful to give sort of an overview of, let's share the story of how it came into being, what the ideation was like, what the sort of need in the market was, and then we can sort of make our way to where we are today and where we want to be in the next, 6 months to a year or whatever it is.
Yeah, absolutely. So the core idea of Fungify, like the very first thing we were trying to do was trying to create an NFT index, right? So we looked around and there really weren't a lot of good opportunities on the market to where you could just put in some money and get exposure to blue chip NFTs in a pretty straightforward and decentralized way. And that was really like the core of the idea that launched us on this path. There were other things on the market. There were that kind of promoted some level of fractionalization, like NFTX, but they had all these different vaults, and they were distributed, and you'd have to pay all this gas to actually scoop them all together, and then there was all these price impacts because there's all these different Uni V2 LP pools that are kind of capped out in the liquidity that they can get. So we were like, hey, we need an index that is just all one vault that you can go put your money into and get NFT exposure. And that was sort of the seed of the Fungify idea. One thing that we kind of did differently than other approaches is we like more explicitly had an oracle. That way you could put multiple different heterogeneous assets into one vault without having to like break up assets into all these different like kinds and use like a Uniswap pool in order to to get like arbitrage based pricing. So that was the core of the idea. And as we're working on it, we're like, hey, NFTs are kind of weird because people actually have this attachment to their NFTs. And we want people, and we wanted to service that part of the market where people who have attachments to their NFTs but want to participate in our protocol. We wanted them to be able to get liquidity too, because while we saw fractionalization as a core to upping the liquidity in the overall NFT market, our bigger mission was, hey, everybody has these NFTs. They want to get liquidity from it. How can we kind of unlock that liquidity in the ecosystem? And so what we figured out was that even people who don't want to part with their NFT could participate in our system. And so we came up with this idea of allowing your NFT to be in the index, but have it reserved. And in this sense, you're sort of, you're making it so that the index might not be fully redeemable if you're reserving some of the liquidity. And to address that, what we put in was an interest rate model. And at that point, we were like, oh man, this is actually like it's not just an NFT index, it's also a lending protocol. And I think that's kind of it synergized with the index in that it made it so that everybody else holding the index is able to earn yield. And so it's not just an NFT index; it's an NFT index that earns yield, and that kind of differentiates it from a lot of the other possible approaches, like perpetual based approaches, where if you do want to get if you do want to get exposure, you have to pay a funding rate, and you're actually bleeding out money. Whereas with this NFT index, you're actually holding spot, and you're gaining money and you're gaining yield. So I'd say that's like the 100-foot overview of what we were doing at Fungify and kind of how the initial idea came about. Lately, too, we've been looking at different angles of how the assets inside the index can actually be put to work in other ways too. For example, we're going to be putting out a paper and some documents on this shortly. But in fact, like NFT renting, where you can rent the NFT, pay interest, get access to some of the benefits that they provide, or you could short sell them, importantly. So there's kind of like a lack of the ability to short sell specific NFTs if you think you have some kind of information edge above just short selling the overall index, if you think you have insight into a specific collection. And we've been hearing a lot of people really want this kind of functionality to come onto the market, and not just in a peer-to-peer way, but in like a peer-to-pool sort of fashion.
Yeah, no, 100%. I mean, the NFTs are, I mean, they're one of the coolest sort of innovations in the crypto space, in the last however many years, in terms of their like explosion. And there's been quite a bit of effort, work, thought, capital, time put into trying to figure out how to unlock liquidity and use cases for NFTs. outside of exclusively, this is my profile picture, or this allows me to get access to a community. Because the nice thing about having things on chain is, that when things are tokenized, you can theoretically play all these different financial games with them. But NFTs being what they are, being true one of ones in terms of, not being fungible, so to speak, right? They've created certain barriers relative to other traditional tokens that we've been building all these primitives for. So it's really interesting to see the wave of sort of people trying to unlock the new financial applications for NFTs, because it's very clear that there is and going to be a massive market around the quote unquote financialization of NFTs. And I mean, I think you did a good job sort of covering like a great overview on what Fungify is, but it's really interesting to think about and even discuss some of the sort of like, I don't know, macro narrative trends around NFTs and their financialization. Obviously with fractional being one of the first sort of applications to be any type of primitive around NFTs and their sort of introduction into DeFi, and then obviously with Blur, and all of the incentive game that they played with the tokenization that led to these massive bid walls in their season two of rewards, where it was like, I mean, I don't even remember who it was. A couple of the NFT guys dumped like, $9 million worth of Bored Apes into a pool because there was that many bids, right? And it was like there's been quite a few. It feels very, very Wild West in terms of where we are at with NFT financialization. But it's clear that the market wants some sort of solution. And it's really interesting, this is the solution that Fungify is proposing. The idea, I mean, I think most people that are probably listening, where they own NFTs, and it's like, hey, okay, I have these NFTs. They're sitting in my wallet. I look at them on OpenSea. I probably don't use most of them. What can I do with them to earn some yield without selling them? That's probably like the lowest hanging fruit. And unless you want to go like farm bids on Blur, which is very, very much not, doing things with the NFTs that you already own, there's not much that you can do currently with them. So the idea of an index that you can do something with your NFTs in is very intriguing, I think, to a lot of people, because people want to put their assets to work. And then secondly, the idea of being able to get exposure to that entire world without having to go learn the entire world and dabbling with buying on OpenSea or whatever it is pretty compelling as well. The fact that you guys are working on shorting specific NFTs is really massive, because it feels like that's pretty much the only core primitive that's missing in the space. Obviously, you can sort of go long, and you can even lever up long, by using like a lending borrowing solution with NFTs. But there's no really compelling way to short them currently. So that specific feature, I think, would be very interesting. I mean, I see people tweeting all the time, this project is terrible. I would love to be able to short them, but I can't short them.
Yeah, it's just all over. I mean, the demand for this sort of product is absolutely, people are begging for it, and we even like retweeted somebody recently who was begging for it just because it's coming up so often. But yeah, no, the macro perspective is like, it's really interesting. I'd love to just like talk about that for a second, like where we're kind of viewing it at. Um, like, and I think this is like kind of a well-worn point in NFT circles at this point, that like the amount of attention we get on any given NFT collection, if it was if any altcoin was given that amount of attention, the market cap would be much larger. And we kind of see there being like a, in the NFT fi space, we're doing like a multi-front assault on getting these, these barriers to capital, these like large lot sizes, like, hey, you have to have $80,000 to get an ape or something, or exposure to an ape or something like that. I think it's not just us. I think it's also as well like other approaches to there are things like caviar and whatnot coming out, where there's going to be kind of like marketplaces that bake into fractionalization. I think that's going to be really major towards lowering the barriers to capital. I think products like our own are also going to be pretty significant and lowering the barriers to capital. So I think that in the macro perspective, what we really want is we want all of the different NFTFi projects to come together and make it so that any given NFT asset, no matter how much money you have, you're able to get in there, and that'll hopefully kind of get us up to parity with the rest of the altcoin markets in terms of like market cap per unit attention, and you know, and I think also like this creates like a lot of like there's a lot of volatility and there's a lot more stress that happens because of how limited the pool of buyers are. There's a lot more stress that people feel when like a large holder kind of moves their holdings. Obviously, like any given asset, people are upset when large holders move their move like any quantity of the assets. But I mean, we have like absolute microscopes put on like almost everybody who's moving anything above like one or two, and people like really feel the effects of these prices. And I think we're seeing that in large part in this controversy around the blur farming. There's all kinds of different takes on it. Like, for example, I saw like Fubar coming out and saying, "Hey guys, I don't get why everybody is so upset. Blur is incentivizing bid liquidity. That means it's making it harder to push down the price. That means there's more money looking to buy the NFTs, right?" But then there's this sort of like almost intuitive sense from like the community at large that somehow this like, okay, yeah, sure, that makes sense, but somehow the blur farming is still fucking these communities, is somehow dumping the price. And I think a lot of people um, find it hard to square like, okay, how can increased bid liquidity and like more money coming to buy the NFTs like pan out in the NFT prices going down? That's counterintuitive or even doesn't make sense. But I think right now it's like with all the it's like you said, these guys who dumped $9 million worth of Bored Apes, they probably wouldn't have done that if there wasn't just like a big subsidized pool of
No, I mean, they definitely wouldn't, and they couldn't have because, I mean, I mean, what, love them or hate them or whatever. I don't think there's, I mean, I think that game is kind of silly when you're in a free market like this, right? But like I mean, if they had started selling, I don't remember exactly how many apes it was, but it was quite a few. If they had started selling them, they would have, probably significantly moved the floor price down with their sells.
Mhm.
Um, and so it gave them an off ramp to exit at like a really, really stable price, which was very interesting. And it was very clever of them, I think, to take advantage of the fact that happened.
Oh yeah, and I mean they're not the only ones who like took the
Oh no,
cue. I mean, if you think of it from like a sort of like quantity theory of money perspective, like the assets went from sort of like patient low velocity holders into less patient higher velocity holders, and that's
yeah,
just going to equilibrate to a lower price point overall.
yeah.
So
Well,
like,
it's funny because people would get upset that like, oh well, like people weren't upset when the blur incentives caused the price of their NFT to go up, but then when people would sell the NFTs because they were farming the bids and they decided to move to another collection, then it would drive the price four down, and then people got very upset at Blur. It's kind of funny because people weren't upset when like the Blur bids clearly were responsible for a large chunk of price appreciation in terms of NFT floor prices.
yeah, yeah, absolutely. And I think a lot of like I get the sense that there were people definitely like bidding on Blur in season one, but once everybody saw these airdrops, the market like quickly became like efficient with respect to those yields and sort of saturated. And I think that also kind of corresponded with a lot of people like piling in on the upward price action, and then sort of like facing the longer term consequences of this like high like the assets ultimately becoming higher velocity. And that's and
Yep.
that's where a lot of like people's pain and sort of complaining is coming from right now.
Yeah, I mean, it was silly. It was silly to think that after the first airdrop that you could absorb tons of losses on NFT trades, and it would be an EV positive strategy long term based on an airdrop. Especially when everybody's farming it. Like that was pretty silly to me. And I say that as somebody that was like farming Blur pretty early, and like I was around for the first airdrop. Once the first airdrop happened, and you saw the volume after that, I was like, yeah, I mean, this is going to be absolutely 100% a losing trade, for the next season, with some exceptions.
Yeah, it's like the secret's out, and then basically yields are going to collapse to the level that other DeFi yields have been at best, if not worse, because people are so thirsty right now. I mean, we're
Yep,
basically below the risk-free rate in almost
totally,
every market.
totally agree. Yeah, so
I
talk to
think
me about some of, or go
Oh,
ahead, go ahead,
I
Hamza.
wanted to add something to that. I think one thing we can take away from everything that happened in Blur is this idea that there is this, everyone's screaming at OpenSea right now to do some type of token drop to reward users for using OpenSea, right? So there's this notion that, hey, the people that are coming to these protocol or these marketplaces and providing liquidity or making liquidity in the form of NFTs or other capital, that there should be some sort of reward or split of what the marketplace is making, right? The fees. And I think I wanted to add just in terms of Fungify, this idea of an index rooted at the bottom of it and the our ability to stake that NFT index token, giving you access to the fees that are occurring. So it's like you're being rewarded with sort of real yield, real fees directly back to, in our case, to the people that are providing liquidity within our protocol. So I think the big takeaway from Blur and OpenSea and everything, there is a real demand from the community for, saying, hey, there should be a distribution of fees to those who are providing liquidity. And whether that's in the form of airdrops or NFTs or distribution of fees, like this is something that's important. And
And,
I think that's an important point to add.
and probably underemphasized in our own, like, talking about our protocol and what we're doing is the fact that we do have a marketplace. So you can put your assets up for bid on our marketplace. And, when you hold that index token, you actually do participate in the overall holdings of that marketplace. So, and like sort of like as a real bonus, we think is like you also are able to get an advance on your asset as you have it up there on the marketplace, which is like functionality that like OpenSea and Blur obviously don't provide.
Yeah, so explain a little bit more about that because I think that's super interesting personally.
Yeah, so for example, in our protocol, let's say you have a gold ape, right? It's worth some multiple above the floor, and you're looking to sell it, but you want some immediate liquidity. You could come into our protocol and take an advance on that sale in a way where you can borrow against it based on the floor price plus the multiplier that we allow for, and then list that gold ape and take your time in terms of being able to sell that asset. Instead of sort of trying to sell that asset in the open market where OpenSea or Blur, you'd have to wait around until someone actually gives you some bid that's actually worth the value of the NFT. So it's the ability to sort of take an advance on that sale, as Mob just described.
That's extremely interesting, especially for the NFT. So, like, one of the things that people like, I mean, there's the famous D's quote, which is like, floors are for flippers, ceilings are for fans, right? Which is this idea that, if you wanna trade NFTs from as assets, you need to only buy floor NFTs, right? Because
Mm-hmm.
it's difficult, and there's a time component in terms of the liquidity for you to sell NFTs that are rares or that are premiums, right? Like if you have a gold board ape or you have a hoodie punk or a spiral fidenza or whatever it is, right? And so
Mm-hmm.
the idea, so a big part of the problem with there's clearly a lot of liquidity that is, I would say, I don't know if locked in the market or like it's not being efficiently used in the market that would be unlocked drastically by the ability to get an advance on some of those rare premium tier assets. That's really intriguing because currently I think those are missing, right? Like there's nowhere really that you can get a proper, I would say, like valuation on the NFT that then allows you to get liquidity for the NFT. And so the thing that people have to do is if they need liquidity from the NFT, they just have to either floor it or they have to get a loan that's not economically efficient by basing it off of something other than the proper
Yeah.
market valuation. So that's really cool. I think that's
and
one of
and
the cooler
there's
innovations attached there.
there's almost like a vicious cycle at play here, because it's like, yeah, even if you do like Bored Apes, you're still an economically rational actor. And I mean, when you put all that money in there, that's a capital carrying cost that you have to bear. And once you're able to unlock that liquidity, that means whoever you're trading with also is going to be cognizant of the fact that in some real ways their capital carrying costs are being relieved by letting them also have access to the liquidity. That's going to allow for these higher tier assets to have higher velocity as well, since the costs of holding them have in some ways been lowered.
That's very interesting. Okay, that makes sense. I see exactly what you mean. So there's actually even another effect on the market in terms of people's willingness to own those assets because they aren't going to be stuck in what they would consider to be an illiquid asset they can't tap any liquidity into. So currently, you might not want to buy, a rare. You might only want to buy floors as investable assets because they're the easiest to sell in the fastest way and the most efficient. But if you can now access some liquidity from those premiums, then there's sort of this. I mean, I don't know if it's a self fulfilling prophecy or what kind of cycle it is, but it's something along those lines, right? Where it
A
that's really
virtuous
clever.
cycle,
Yeah,
perhaps.
a virtuous cycle, perhaps. It's some sort of cyclical movement where x equals y equals x, right? Something like that. Okay, that's really cool. Yeah, and I really do enjoy discussing some of the sort of like macro economic, not economic, macro like NFT narratives. I'm curious, and maybe this is too on the nose, but I'm curious how you guys view yourselves positionally in the market from a competition perspective relative to OpenSea, Blur, whatever these other NFT Fi primitives are, some of the other lending and borrowing exchanges. How do you guys view the market for NFT financial primitives generally, and how do you want to position yourselves, both privately and publicly in terms of competitor versus working together versus we're all in this together sort of thing. And obviously, I know on some level we're all in this together, and it's like rising tide, lifts all ships sort of thing. But I'm curious how you guys think about the product offerings that you offer relative to some of the other, um, I would say, NFT financial applications that exist in the space.
Yeah, I think like our thinking about it is that we want to emphasize like our sort of like unique value proposition, which we see more as being the yield bearing index rather than the lending or even the marketplace. And also like related to that, it's not just like our unique value proposition, but like internally as we've crunched the numbers, we sort of expect that the majority of revenue that we're going to collect as a protocol is probably going to come from people like retail and other people who just want access to the index. As the index kind of like grows and shrinks, and arbitrageurs are incentivized to keep the peg price there. There's like a little bit each time that's captured by the protocol, and so we think that's going to be the primary revenue source for the protocol. But obviously, like we think we bring some pretty nice functionality to other parts of the market, like the lending market. We're probably the place where if you're worried about losing your specific NFT to a margin liquidation, you're going to be safest on our protocol, because our protocol um, has you borrow against the index, which factors out or it factors out more volatility than any other unit of account you could be borrowing against, whether that's USD or ETH. And then on the marketplace side, we think there's also a strength there in terms of especially like higher tier assets, where being able to borrow against your capital is really attractive. Perhaps like on the floor side of things, um, places that kind of have a more order book style of doing things might be better positioned for that segment of the market.
Explain the first thing a little bit better about the loan to value collateralization and how the index is better from a lending perspective than some of the other lending borrowing protocols. Can you explain what you mean a little bit more?
Yeah, yeah, absolutely. So, like, say you go to like maybe some of these other lending protocols that exist right now. You're borrowing against your NFT, and say you're getting ETH, right? So, if the price if the price of ETH, the price of in terms of ETH of your asset moves a lot, that could subject you to liquidation. So, like, just general market movements expose you to liquidation risk. Whereas, when you borrow against our protocol, since you're borrowing against the NFT asset, your specific NFT has to do badly against the overall NFT market in order to start moving your liquidation price closer. So you,
Interesting. So even if the overall NFT market goes down, it's
you,
it's
you
it's it's more that you're betting with your specific NFT proportional to the NFT market directionally.
yes.
Very cool. Oh yeah, I mean that's super compelling and super clever. Um,
I
okay,
wanted to add, like in the same way, when we talk about short selling, actually the yin to the yang is going to be available as well. So that's something that we're going to release shortly, talking about how that'll work. So betting against a specific NFT collection against the index, um, that's added functionality coming.
I do think that people are going to start converging on this perspective that in a lot of cases, it's actually just better to deal with the NFT index. Like, if you want to go leverage long, might be a better idea to just do it with the NFT index. Or if you want to go short, just do it to the NFT index. Because in a sense, you have to ask yourself the question, like, do I have some specific knowledge about which one of these NFTs are going to outcompete the overall market, or do I just have a larger thesis that can be validated by the movement of the NFT market in general, right? So it's kind of like one of these situations where people are like, hey, like, just invest in ETH. You really think you can pick an altcoin that's going to
I
outperform
see.
ETH? But
Yeah, okay, so I see. It's very clever. So it's hey, if you want to be, a super degen and you want to go long one specific NFT, you're welcome to. But why dabble in picking winners and losers when the whole market's going to go up? Just bet on the index is basically similar to the buy ETH, don't buy shitcoins narrative.
yeah, and I
Yeah.
mean, there's some
Sorry, go
people
ahead.
who do have that special insight, who do have that alpha. Maybe they know something about a specific collection and they want to contribute that information into the market. And but we do think kind of the larger use case of most people, and like probably when they're honest about their level of insight, it's, yeah, I should buy ETH instead of going around to the different shit coins.
Yeah, but also for those people, there's now also the ability to short as well, um, which is huge for those people. So, like, if you want to be the degen that has specific insight on a specific market, yeah, okay, that's pretty clever. Go ahead, Hamzo.
Well, I was just gonna add to that point. Yeah, just emphasizing again, the relationship between ETH and alts, very similar in the same way to index acts as the ETH, and the alts are the NFTs within the index, right? So you take directional positions relative to that. So I would say it's like analogous to that. Just adding that emphasis. But I wanted to go back to your question about how we view ourselves and in terms of play nice, or how we integrate. One thing I would add in terms of marketplaces, I wanted to emphasize that we want to be integrated with these aggregators like Blur and, for example, now OpenSea Pro. So our intent here isn't to necessarily compete against these marketplaces, but to be integrated or be part of the aggregation process. So that way, when people are listing their NFT assets on our protocol, it also gets picked up by Blur or Genie or you know uh, OpenSea Pro.
Makes sense. How do you guys? I mean, maybe talk without obviously going into too many of your plans and the plans that are necessarily there. I'm curious how you guys think about some of those sort of integrations and what you might think the composability across these sort of what we'll consider NFT financial tools to be, and how you like what's the sort of long term vision, at least generally, with how Fungify fits into the stack, so to speak.
Yeah, absolutely. So, like, just like segueing really nicely from what we're talking about with these marketplaces, like, one big difference between our marketplace and some of these other marketplaces is that our marketplace is on chain. It is not an off chain marketplace. And, there, I think, like, especially in early DeFi, a lot of people were very bullish on maximizing the amount of things that you did off chain to minimize the cost, but that also came at the cost of composability. So we're going to have a marketplace that does kind of exhibit this on-chain composability, and we're actually really excited to see where that goes overall. Because if there's any sort of mimicking of previous sort of like DeFi stages of development, this could actually turn out to be something that's maybe much better than people would initially appraise it as, in terms of the downsides of being on chain. And then, like, kind of further than that, one thing we really see ourselves being part of is the like perpetuals ecosystem. We see this sort of like trinity of like our protocol, yield farming vaults for sort of like delta neutral strategies, and then market makers on perpetual platforms. Because I think like if you like zoom out again and you look at what's happening in the more traditional ERC assets and all of that, you see that like an overwhelming amount of volume is actually happening on perpetuals, and we think that there's going to be like basically a very similar structure of the market in that sense, where perpetuals are one of the major places that volume is happening and trading is happening, and then market makers need a place to hedge, and that's kind of where we come in.
Very interesting. Okay, that makes a lot of sense. Um, how do you guys envision? What's the sort of way that the perps work from a technical perspective? If you can get into some of it.
Yeah, absolutely. So, like, for example, like if you if for specific NFT markets, right? You would go and you would go short on those markets, and then you would go long on, you would like leverage up long on the spot side on our platform, or alternatively, say like perps added like an NFT index, right, where people wanted to like really just get access to degen leverage on like a collection of NFTs. You could like, it's likely, again, like most people like to go long. So you as a market maker, you can go and kind of provide that short liquidity, go on the other side, buy up the NFT token, stake it, earn yield while collecting the funding rate at the same time and being delta neutral. So there's kind of these like fun little strategies that we can unlock and kind of use to interface with other protocols on the market.
Makes total sense. Um, that's really cool. I know we have like, I don't know, 15-ish minutes. I know we can go a little bit over. Let's talk about maybe what the sort of timeline and plans are timeline wise for the next 6 months. Maybe talk a little bit about what, if there's a token, what the token might look like, how people can get exposure to the token, and if there's any ways that they can begin, in being involved in the community and helping the community out. If there's things that they can do there, and sort of, I guess, look ahead a little bit there.
I'll let Hanzo get this one.
Yeah, sure. So in the short term, as I mentioned, we're about to launch on testnet. Since there's a small group of people here, I'll leak some alpha. Shortly after that, we actually plan on conducting a paper trading competition that'll be co-sponsored by some other NFT projects, and that'll actually run for a few weeks. And as a part of that competition, winners will have will be given potentially a Funge airdrop, the token that we're talking about, as an incentive. And that'll lead into giving us enough time to get audits ready for mainnet launch. So that's sort of the rough, timeline that we're looking at right now. In terms of the token, we're not ready to, or we're not going to disclose any information right now in terms of a token sale or what we plan on doing quite yet. But one of the key ways to be part of the community is to participate in the testnet, participate in the paper trading competition. The paper trading competition will be gated specifically to first priority, our own Discord community members, and then some other community members that we're collaborating with.
That's cool. Without going into the details around token launch mechanics or token sale mechanics, can you talk a little bit about how the token functionally works in terms of its representation of the index and what some of the sort of like economics and utility are without getting into too much of the nitty gritty?
Oh, to clarify, there are two tokens. One is like a governance token that we're like kind of keeping low on the details around right now, but like more importantly, which we want to shine the light on, is the index token. So I think that's what Michael was more asking about, Hanzo. Maybe just
Okay.
like some of the mechanics of like, how does this token work? How does it accrue fees? What can you do with it, like in terms of like minting and redemption, and more like mechanical sort of questions like that, right, Michael?
Yep, I would say that's accurate. I mean, both. It's a both and.
Oh, sure. Yeah. So for the NFT index token, right? That is only minted when an NFT enters our vault. So either when you sell your NFT directly to our index or vault, or when you're using that NFT as collateral to borrow against it, right? So that's what the circulating supply of NFT index token is, and it's proportional to the underlying value, or the way you determine the value of that NFT index token is tallying up the total value of NFT contained within the index, right? Divided by the circulating supply of the NFT index token. In terms of the mechanics, right, you have the ability to stake that NFT index token to earn yield from the interest that borrowers are paying, in addition to any of the fees that are collected through the marketplace activity. That staked token, the staked NFT token, is a liquid derivative that can also be traded. So that's what's primarily going to be traded in sort of the open market, in a
And
Uniswap pool
and
or whatnot.
and when those fees come in, they are themselves denominated in the NFT index token, which automatically compounds for you as well.
Correct. Yeah, it's auto compounding. And then yeah, I think I covered most of and then obviously the NFT index is fully backed. So in order to redeem an NFT from our vault, you simply have to burn an appropriate amount of NFT index token to gain or to access those NFTs. And then I think I covered everything else. It's basically, think of NFT index token as a currency that can be used within our protocol, and everything is sort of denominated in this NFT index token.
Makes perfect sense. Um, I'm curious if there's ever any plans to sort of like if we're talking like multiple years down the line, adding any sort of social elements to the sort of game and platform where obviously one of the big things with NFTs is the cultural social component that exists, right? In terms of there being communities. Do you guys plan on strictly being like, hey, this is a tool, or do you guys have any ideas around let's build a brand and community around these sort of use cases and gamifying the use cases in the brand? I know that's a bit esoteric of a question. Do you understand sort of what I'm getting at?
But yeah, I mean, I think any time that there's sort of like room for variance, uh, people kind of enjoy that. I mean, I suppose you could say it feeds the gambling urge, which is not
Yes.
so uncommon in the space. And to that end, clearly, like the redemption mechanism has some of that built into it. So we can imagine, like either hooking into existing platforms that already try to offer this in a more centralized way, or building out some sort of gamification around it. I mean, if you're familiar with gacha games in Japan, I don't
Oh
know
yeah.
how that hits this audience, but there's a lot of similarities there, and it's very easy to imagine a sort of gacha game being created out of the redemption mechanism itself. And that's definitely something we're interested in exploring. The exact strategy we're going to use to get there, whether that's in collaboration with other projects or being built out ourselves, is still to be determined.
Okay, makes perfect sense. How do you guys want to spend the last 10 minutes in terms of like where do you guys want to take the conversation? You guys obviously are more experts in what you're building than I am. Where do you guys want to spend some of the last, I guess, 10 minutes that we have here from a time perspective?
Whew. Honestly, it does feel like we've covered quite a bit of ground here. I mean, possibly we could just like open it up to some of the audience too, if they want to raise their hand and ask some questions, interface with us.
It's a great idea.
Yep.
Yeah, if there's anyone that wants to come up here and ask some questions or have some sort of opinion on the space and where the space is going, feel free to raise your hand. We'll happily bring you up, and you can 100% interface and discuss. And we'll give people a minute or so to do that.
I mean, in the absence of that, I'm fine wrapping it up.
Okay, perfect.
I think we were planning like 40 minutes, so we might have gone over in terms of what we thought internally. Anyway.
Okay, that's fine. So let's do a quick little wrap up then, just for everyone's benefit. What's the ways they can be taking advantage of getting involved in the community? Go into the Discord, sign up for the testnet, be involved in the paper trading competition when the paper trading competition happens. Obviously, social support is great. Is there anything else people can be doing, or any other ways that people can contribute?
There's a secret puzzle in the Discord, which I encourage them to solve.
Oh, okay. There's a secret puzzle. Okay, all right. That sounds good. We'll have to check out the secret puzzle. Anything else that you would want to leave people with?
No, Hanzo?
Get hyped. I mean, it's coming.
Get hyped. I love it. Okay, perfect.
It's been a journey, but yeah, we're really excited. I can't wait to reveal the product itself.
Yeah, well, I'm really excited about the launch too. Obviously, there's a lot of hype in the crypto space and a lot of people that say they're going to build things, and it's a very different thing to actually launch products, especially like 0 to 1 financial primitives. And so I'm really excited to see, how all this stuff goes. I think this is going to be a pretty fun year for Fungify, and definitely excited to be on the journey with you guys.
Thank you so much for hosting, Michael. We really appreciate it.
Yeah, no, of course, and thanks to NFT Price Floor as well. Really appreciate you as well for helping facilitate this. Happy to host anytime, and I mean, I love talking about this stuff. I love interfacing with communities that are involved in the space, and so makes perfect sense for me to continue to do this. So yeah, let's catch up again soon, and we'll make it happen. But for now, we will sign off and sign out. Thanks so much for the time, everybody, for joining in, and for Mob and Hamza, and for NFT Price Floor for hosting as well.
Thanks so much,
everybody,
so much,
Michael.
For tuning in to
Yep.
listen
With
about
that,
Fungify.
yeah, of course. With that, we will sign off, and we'll see you next time. Take care, everybody.
All right. Bye.